Welcome to The Missing Link, a podcast where crypto and insurance come together. I'm Dan Roberts, and my co-host is Danielle Wall-Elliott. Whether you're in crypto, traditional finance, or in need of a new podcast, The Missing Link will help you explore the vital role that insurance plays in crypto and how blockchain will disrupt insurance. Join us on our journey to find the missing link. Hello everyone, today we speak with Mona Tiesler of Tokentus. She paints a wide picture of the venture landscape, dives into the macro environment, interest rates, FTX trial, cutting through the noise when selecting good projects, and her take on when a lively crypto market may return. No moon fumes here currently. It was a great discussion. We appreciate her a lot. We hope you enjoy the conversation. Hello, everyone. Welcome to another great episode of The Missing Link. Today, we have Mona Tiesler, an investor at Tokentus Investment AG, a leading VC firm in the German blockchain ecosystem. It's a very long background. I'll try and keep it concise, but background in strategy consulting, venture building, and entrepreneurship. I have sort of direct conversations knowing about your deep background in entrepreneurship. Would love to get onto that later. You co-founded and led companies in fintech, edtech, food tech. You hold an MBA. Mona mentors several startups as well. Would consider names as one of those. And is a member of Global Women in VC, a community of female investors. I could go on, but for now, Mona, how are you doing?
Very well, thank you, and thanks for the nice intro. How are you?
I'm very, very well. Did I miss anything? Any large gaps in your very diverse, impressive background?
No.
Perfect.
Well, no, all perfect.
Well, I'll ask a few more questions then, some quick ones in our lightning round to kick us off to get to know you even better. We always ask all of our guests to rate themselves 1 to 10 on their crypto knowledge, as well as their insurance knowledge. And that kind of just takes on, the topics that we discuss here and let us kind of see, what your background is. So where would you rate your knowledge on crypto 1 to 10?
10 is the best, right?
Yeah.
To be honest, and this is supposed to be concise, so I would say a 7. I think there's such a vast landscape that there's so much more for me to learn. Maybe it's even a 6. But I do try to be as informed as I possibly can in all the different verticals due to my job. But I do feel like, there's so much scope for being more technical, for learning even more.
Yeah.
A modest 6, yeah.
And how about insurance?
Honestly, the pure insurance industry, probably a 4 to a 5. But the more, let's say, innovative aspects around insurance and the new insurtech landscape, and obviously what Names does, brings me in that specific space, also to a 6-7, I would say. But the traditional one has so many nuances.
Totally. All right. And then one quick tip for founders that are raising in this market.
Be very well managed with runway. Really think about which investors are really value add and can carry you also in bad times. And try to think of how to manage your team, your financials, and your products in a humble and, longevity type way. Don't go bull market vibes, what I mean? So it's really important to be aware of the fact that the market might not improve for another year or so, in my personal opinion. And I think you need to plan for that, because otherwise it's not going to be easy to survive, even if you have a phenomenal product.
Yeah. All right, everybody. Hope you took notes or rewind and quickly jot those down. That's important.
But if we can start in the venture world, if we start here, how do you see the current venture market? You have, traditional venture space, fintech, etc. You then have the crypto world going through its own thing, and then you bring those two things together, crypto and venture, and that must be a an interesting spot to strategize as to where things are going. There's lots of shiny things coming along with AI, and blockchain's had a few of its shiny moments. What's the space doing? Where's it gone? How are those that are really dedicated to the space looking at it from a venture perspective?
So I think there's, just in terms of traditional ventures, I do still see a lot of traditional industries that are ripe for disruption because there's so much digitization. I think the insurance market is a really good example, obviously bringing it up also in the context with you guys. But I do think that there's so much need for a bit faster, more efficient ways of working in that industry. And of course, tokenization in the insurance industry is also a very, very interesting component we shouldn't forget. It's complicated, I think, but you guys are doing a really, really good job in making that happen. But I do think in the traditional venture world, completely separate from Web3, a lot of the Web2 investors that I speak to are also looking at, disrupting traditional industries with very innovative and regulated ways that can help make things more efficient and save costs, specifically in an industry where everything's getting more expensive, in a world, where everything's getting more expensive. Cost savings are a big factor, and doing things quicker, more efficient is really a focus of a lot of investors, no matter if they're Web2 or Web3. In general, maybe more from the Web3 perspective, what we see is very much the case that a bear market is here, and it's been here for a while, and I also think it'll be here for a bit longer. And that means that a lot of great companies are really struggling to fundraise, but also a lot of good VCs or good emerging fund managers are also not able to raise. So you've got that cycle that just means high interest rates, not a lot of liquidity in the market. People are not needing to invest in high yield bearing assets as much, right? Because interest rates are high. So we have this very interesting situation where, it's tricky. There's a little bit less money to deploy. The startups need to be worried about their runway and manage their funds well, but the VCs also do, right? So the venture world is feeling the same pressure, which I think people tend to forget. It's like this, again, we're all facing the same market challenges to some degree. And therefore there's a little bit less money deployed, I would say. But just to finish that thought, I think a bear market, as we all know, is for building, and also a really great opportunity to get time to do due diligence as an investor, time to really understand the market that you're looking at investing in, etc., which means that actually it's a really, really good time to really negotiate from both sides valuations that actually make sense and are not super hyperinflated. And it also makes sense to spend a bit more time with the startups that are in your portfolio or that you're thinking about investing in, because you have the time, because that massive pressure of a bull market isn't forcing very poorly due diligence decision making. And therefore, there's also, I think, a lot more thought at the moment in the investment landscape in general, and a lot more detailed discussions and research happening, which I actually see as a very positive.
Yeah, and you've touched a lot on that bull and bear parts of the market. And yeah, having been through that myself, I totally identify with what you're saying. Like, it's crazy time when it's that bull market where you're like, you can't catch your breath. And so we all know that, okay, bear markets are for building. And but I was curious if you could kind of expand more on maybe the macroeconomic climate. Like, is it just the fact that we're competing with the interest rates, the T-bills? Is it just the fact that, crypto is down, or are you identifying other trends that maybe Web3 founders or companies need to pay attention to, or maybe not even, specific to the Web3 companies, but could we kind of even zoom out a bit more? And, what are you seeing? What are you looking at?
Yeah, I mean, just to recap, I obviously we do see, that higher interest rates mean less liquidity, mean, less money in the market, obviously lower asset prices, etc. We also, I mean, I think what we've been seeing is that also the Fed, for example, has been kind of, let's say, slowing the pace of interest rate hikes, maybe even halting them in an extended pause. I do think we might see some more, but in general, it's not as aggressive as we have seen so far. Obviously, also because inflation is a lagging indicator, so it'll take a bit of time, right? 8+ months until we even see some sort of, let's say, less inflation. And obviously, I think the Fed and others don't want any investors to now make huge bets on interest rate cuts and then don't have the kind of ability to preempt other issues, other risks, such as the rising oil prices, for example, which are also going to be a macro factor for everyone, not just Web3, obviously. And then, of course, I don't want to dwell too much on it, but we obviously have like a quantitative tightening environment, right, where we have long-term interest rates increasing again, reducing asset prices. And that could also be a factor to lower interest rates, which is kind of like a secondary factor that's used, right, instead of the interest rates. This is kind of an unusual kind of string to pull maybe, but we're already at that point, which, however, may cause, also the lowering of inflation, which then might cause the interest rate cuts. So long story short, I think what we're seeing is maybe a movement in the right direction from a macroeconomic perspective, but not for a while. I don't think we're going to see, massive interest rate cuts until a year from now. And until then, we're going to have this high interest rate environment, which we're all going to be still dealing with, and we're all not going to be enjoying this massive liquidity in the market. But to answer your question a little bit more directly about the other factors, I think in the crypto environment, you have a few things to consider on top of the macroeconomic factors, right? Which is, in my opinion, market confidence and adoption, the regulatory environment and frameworks in place, technological advancements that are happening, and also liquidity conditions that are specific to Web3, right? Those are kind of 4 other factors. Would love to also hear your thoughts, if you agree with me or if you have other opinions from what you've seen, because you're really in the weeds.
Well, what I'm hearing from you, I think that gets me the most excited is just that it's not all based on the price of Bitcoin and Ethereum. And I think early in my career in crypto, that was like every morning you're waking up, you're checking the price, you're really focused on these small movements and trying to predict what's next. And I think that as well, in industry, we've matured, and just hearing what you're saying, it's like, okay, yeah, we're always paying attention to the regulatory pieces, of course. But it's like, okay, maybe pay attention to some of those specific projects or specific like advancements, like you're saying, the innovation doesn't stop. If we're saying that these markets are for building, well, then the innovation is happening right now. So, still paying attention to different projects and, getting that inspiration. Maybe it's not moon fumes where we're all panicking and excited and throwing great parties.
One of the bits we'd love to touch on, obviously this interest rate piece comes out a lot. Have you been looking either individually or at Tokentus at these tokenized or stable coins that represent the sort of treasury bill reserve? You've got T-bill, you have SDBT, you've got USDM in Bermuda. There's a number of interesting projects coming out there. How do you feel they're doing? Are they interesting? Are they, signing off all the questions from the SEC? How do you think about these new stablecoins that are trying to allow users of the kind of Web3 ecosystem to get exposure to T-bills whilst continuing to invest in these other protocols?
What I think is interesting is that, in the US, if we look at it, stablecoins are facing so much scrutiny right now, right? I believe that banks now have to kind of come clean and say, yes, we're dealing with stablecoins or we're working with them, and only certain banks will receive the okay to continue doing this. And that seems very let's see, there's a lot of scrutiny, right, in the US with regards to this already, which generally the US is at the moment, I would say, a relatively hostile environment, even though there's so much talent and so much building, and a lot of our portfolio companies are also US based. But that doesn't give me such a good feeling on, stablecoin in usage from a US standpoint. Let's see how it develops. But where I see a lot of interest in where we're looking, we haven't kind of committed or done an investment in the space as of yet, but we're definitely looking at the space and evaluating some players in the space for a while that are doing a euro stable coin, right? There's, for example, the Euro C or Euroc from Circle, and there's the yen stable coin aspects around that as well, where, we've heard that the government in Japan is also quite excited about such an opportunity. We believe maybe the European Central Bank might also be quite interested in an opportunity for a euro stable coin. Maybe potentially to subsidize, debt of some weaker member states in the European Union. So, in general, I would say there is a lot of opportunity and interest in terms of stable coins. I do believe that we need to be very careful and make sure that they're properly backed, that they're actually backed. I'm a little more skeptical around the algorithmic stable coins and those aspects for obvious reasons, looking at certain collapses we've seen, Terra Luna, for example. And but I do think there's a market and there's interest, right? And I just do believe that we need to make sure that it's still within the decentralized nature and doesn't become a surveillance or tracking mechanism for governments. I think we all have to be compliant. We have to have clear and good, sensible regulation that doesn't stifle innovation, which I know is very hard. It's always easy to say that as an outsider, but it should not be the types of, let's say, digital currencies that are actually, in my opinion, quite harming to the individual if they can be, used for certain surveillance purposes, and every move you make is tracked in that respect. I just don't think that that's what our industry stands for or should ever stand for.
Yeah, big tech is scanning eyeballs now, so we gotta stay close to these kinds of developments. Crypto's getting involved, WorldCoin, and all of that. Just getting on the regulations side, obviously we've mentioned this kind of UK move, and stablecoins seem to be the first discussion on the roadmap there. Have you been close to the MiCA developments and where stablecoins perhaps fit in that mix?
Yeah, I mean, as you may know, the really large proportion of the MiCA, I think 150 pages proposal or actual framework is really tied closely to stablecoins or dedicated to stablecoin regulation, which is interesting. And I think it's actually not bad. I really don't think it's actually, on the stablecoin part, I would say quite well thought out. I mean, I'm not a lawyer. It's certainly a million people that are way better to talk about this than I am. But from my personal opinion and the knowledge that I have, I think the stablecoin regulatory aspects in MiCA are actually quite well thought through. However, there are other issues with MiCA. For example, there are a lot of aspects around more decentralized finance and then other aspects in terms of decentralized market, let's say, that are not clear, right? And I think we're going to have a MiCA 2.0. I think it was mentioned anyways by the ECB before, where we're going to have to revamp some of this or put more focus on more decentralized aspects around the Web3 space. But in general, maybe just some thoughts on MiCA, because you asked me specifically. I think advantages really clearly are that finally we have something that provides a little bit of legal certainty. And that's very positive, because I think institutions that provide liquidity to the market, which we really need, they are scared. And I understand that, right? Because it's really difficult. Tokentus is also a publicly listed entity. We have to be very careful to not make the wrong moves and to always be 100% compliant. And, big institutions obviously have even more so scrutiny or the same in terms of making sure that they do the right thing and be clear in their regulatory knowledge. And MiCA provides some of that certainty, which I think is very, very valuable. And I'm glad the UK is, really thinking about this too. And you guys are involved, and there's more really people who have a lot of knowledge, well-versed people involved, helping kind of shape some of these things. US, I think, is very behind. So I think MiCA is good for that reason. I also feel like it's not we're just going to adapt TradFi to crypto type thing. It's actually crypto specific. Mm-hmm. It has different rules for certain traditional finance instruments versus crypto financial instruments or blockchain related financial instruments, which I think is also very good, right? It's not just kind of a copy paste and changed of a few words. I think it provides credibility to make sure customers and users are not feeling like they could potentially be scammed. Also, there's a little bit of safety around, making sure that people aren't dragged into scandalous investment opportunities. You have one license for the whole block, I think 27 countries in that utilize MiCA. So that's quite good as well. It's kind of, you can argue it's negative to have a one size fits all. I agree with that argument as well. But I also think it's not bad to have, some sort of similar framework that many can look into and focus on and build upon. I think that's probably high level the main advantages I see having the MiCA regulation. But I do think that in terms of, disadvantages, there are a lot of gray areas, what I mentioned at the beginning. NFTs, I'm not sure how that's going to be managed under MiCA. DeFi, not sure how that's going to be managed. I think it's overseas kind of enforcement, so I'm not sure how that's going to work yet. I feel like within the block, it's quite clear. It's one framework, but what about the US? What about the UAE? What about Asia, right? I'm not sure how that translates, because a lot of the companies we work with, right, are all over the place. They're not just in Europe.
Well, that's the nature. The nature of crypto is that we can be accessible anywhere, all over the world. And so you're giving me regulation for this place and this place and this place, and I think we have gone in crypto from this. Okay, maybe you try to do it in your home country. Yeah. And then you kind of realize maybe there's not sensible regulation, or there's just not clear regulation. So I think people started to move to a place that maybe they just weren't monitoring it. They were just we'll just go here because we can fly under the radar, or they're not really giving regulation, but they're open-minded to it. Well, now I feel and maybe FTX, some of the crashes have now accelerated the move towards no, let's go to places that have something written down. At least they have the rules in place. At least they've told us the rules of the game that we're playing, and we'll adapt to that. I think that is just what the industry has been so thirsty for. And so to get some of these places that have sensible, or maybe it's not even sensible, but it is written down and clear of what you need to follow, I think that is a great trend for us in this compliance and regulatory, piece.
Yeah, totally agree. And have you seen any other countries that you feel have, a strong enough framework also for you guys to operate in securely? Or would you say actually MiCA is so far the clearest?
Well, I do have to shout out Bermuda. Bermuda being, one great thing about them is they've already done this for the insurance industry. A few decades ago, they decided, hey, we're going to step up, build really clear insurance regulation and the reinsurance market. And that's poised them really well to be the third largest reinsurance industry in the world. And so they have done this again for digital assets. So now we're seeing, Coinbase, you're seeing Coinbase go to a few different jurisdictions right now. I think that's where I'm following. It's maybe they're looking at Singapore, they're coming to Bermuda. So they, the UK, they obviously have tried so hard to push forward sensible regulation in the US. And I think now it's just okay, fine. We're not getting what we want here. We're getting sued every time we come up with something innovative. They wouldn't give us the rules. They're just going to come and attack us. Let's go elsewhere. So I think for me, that's what I'm paying attention to. And Bermuda being someone who shows up to the crypto conferences and is actually learning and is actually caring about, what's next, and then coming up with those specific rules around some of the things that you were talking about, DAOs or DeFi or stable coins. Dan, is there anything hot on your radar?
Yeah, I think, in terms of trends, these smaller jurisdictions were able to take that let's learn and put down what we can, put down a sandbox environment so companies can get started very early. And, with relatively, close guidance and limitations on what kind of business they can do. But upon graduating from those environments, they do have a lot of flexibility to start really scaling within those parameters. And then I guess the exciting trend now is that these main jurisdictions, the UK is interesting for us. Obviously, another major insurance jurisdiction as well here in London. You're starting to. Big countries can't take the same kind of approach. There's slightly more stakeholders, I imagine, that they need to, have this checked by before you can, take a first step. But that's an exciting trend for us because we can start to look at these bigger jurisdictions that allow us to work with, the bigger players and all of that. So yeah, the UK is a great one for us, and we obviously track the insurance specific pieces and how that maps onto the digital asset side. But we know, there's plenty of other larger jurisdictions now. I mean, you've got the whole continent getting behind this sort of stuff now. So I think you said it right, Mona. It's just having it there allows people to come in and for regulators to learn and for companies to learn alongside each other. I think the big question for me is, do we feel like there's consensus on both sides as to where we want to get to? We had some good discussions around some of the ways that this technology now can help compliant processes. KYC attestations is one of the ones that we talk about. And, is that technology and the regulators that are often put as this, top-down, sinister big brother type, is that achieving the best for both sides? Is that where we're wanting to go, or is there still some philosophical difference on what we're trying to build here? And I think we're closer than most people think. You have some, the fringe anarchists that that drive a huge amount of very interesting inspiration and sort of activity in the digital asset space for us to really build untethered to regulation where appropriate. But really, there's a growing part of that normal distribution where I think both the regulators, government, and individual companies and users are kind of wanting the same thing. I think technology is able to iterate, more and more to kind of appease that side.
Well, if you want to put your name on it, I feel like that's the thing. Like, if you want to go anonymous and you want to go crazy and say, big F you to all governments, okay, fine. Like, maybe there is that innovation that we need and someone to take that risk. But most of us want to put our name on the projects that we're a part of. And, kind of leads me into, I really want us to touch on the FTX trial. I think that we would be amiss not to, since it's so timely right now. And, speaking of, Sam put his face everywhere. Sam really took on this role. His face is on billboards. He's, hopping around different jurisdictions. And then he says, oh, we want to be the most compliant exchange in the world. And he's pushing for regulation. He's going and testifying in DC, in his cargo shorts and his wrinkled t-shirt. If you've read the book Going Infinite, it's like so many times it's mentioned just like how wrinkly his clothing is. But what are maybe the mistakes that we can learn from there? How does this affect the reputation of crypto? What's your hot take on this trial right now?
It's a great question, and I have been following it, and also, the testimony from Caroline, who ran Alameda, as we've probably all heard, and probably most of us followed. And it's very interesting, I think, to see how pretty much every employee is saying they're guilty and there was fraud committed and funds were misused. whereas the SPF is still saying, no, I'm not guilty. I didn't do anything. And not sure the defense is doing him a favor with that, in my personal opinion. But I'm, again, not a lawyer, so I probably shouldn't make a judgment on that. But it's a very interesting trial, because I also feel like a lot of aspects here are around power, are around not being educated, are around, trying to cover up something on a very large scale, thinking you'll get away with it, and maybe not having the right risk management measures in place, which I really have to also shamelessly have a shout out to you guys, because I feel like you're a really good example of a company also in our portfolio where I feel like you have very, very clear compliance rules, you have strong risk management in place, and you always had that, and you always lead also with that when we talk to you. And I think that's very, very important to have. And we also have a lot of other portfolio companies where we feel the same. Whereas FTX seems to have been a company where one lesson that I think that we need to learn, and it kind of ties nicely back to what we talked about at the beginning, is that in a bull market, there's sheep investors following blindly somebody who's big, right? Yeah. Some big investor says this is a great deal, a great company, it's going to be massive, the marketing is phenomenal, the parties are, super amazing, everything's just so shiny, and you have the persona of Sam with his crinkled shirt and looking all crypto genius, and all of that might be a facade, and everybody follows blindly because they want to ride that wave. And I think the big lesson we need to learn is that don't do that. Stop following blindly. Yeah. Do your due diligence properly, no matter if you're an individual celebrity or just a small angel investor or big angel or whatever. A fund, if you lead investments or you follow on investments, you need to do your due diligence. You need to ask. If they don't give you the documentation you asked for, then maybe there's something wrong, right? Yes, your name won't be on the press release of this fancy new shiny company, but maybe that's good for you in retrospect, because at least you had a reason not to invest because you didn't see all the documents. You didn't, if you don't get to do a proper tech DD to understand where the backdoors are, maybe this is not the right investment for you, right? So I think a big lesson as an investor we need to learn is that stop following blindly somebody who's the loudest voice in the room or has a big brand name behind them.
And even the regulators, I wish they would follow this too, because I feel like, I'm sure the Bahamas wish they did a bit more due diligence on Sam and FTX. But if he's saying, hey, I'm potentially willing to get rid of your national debt, do you mind if I come here and set up a company? It'd be like, come on, buddy, let's get
No, you're 100% right. Exactly. I mean, it's mind-blowing, right, that we have governments, institutions, just following blindly. And we need to stop doing that, no matter how big or small we are and how much influence or not we have. But that, I think, leads to two more quick points that I want to make, which are we need education. People need to be educated about this market. People need to be educated about the risks of this market, but also what is blockchain? What is cryptocurrency? What are the opportunities? What are the potential drawbacks? What are the issues that we might face? And I think we're really not doing a very good job at educating. And podcasts as such, or also other methods in terms of blogs or very well done research are really important. MiCA's kind of regulation to say you need a white paper out, you need to have, documentation out to the public before you can offer certain products, I think is really good, right? Do your own research, read this stuff. Obviously write it in a way that everybody understands it, but you get my point. I think those are really good aspects. And the second point, I mentioned it before, but is risk management, having security measures in place. That's really, really, really important as well, right? For any company, for any investor, we need to learn those high-level lessons, but we need to really manifest them and execute on them properly. But we also see, this industry is quite resilient, right? We had this massive scandal with a lot of loss, right? But that's not the only one. We don't need to cover all of them, but we all know at least another 5 that we can say on the top of our head, which have, impacted this industry very negatively. But this is like a very resilient industry, and I really believe in it. And I think even though I'm not somebody who says after the Bitcoin halving, we're going to have a bull market, I do believe that, by 2025, we'll have a different environment and it's going to look much better, but we're also going to have weeded out a lot of bad players. That's my hope and that's my belief. And I guess that's it for my thoughts on the FTX trial. But I don't know if you guys want to add anything, because you also have a different perspective, right? And you see a lot in the market as well.
I think we've just learned to keep our clothes nice and ironed. That's one of the key
as well.
But I think there seems to be, maybe I'm getting too into the conspiracies here, but there seem to be too many people that would have an incentive to take the whole thing down and for crypto to go away. There was a $4 billion fraud recently in the insurance space, which I'm sure, not that many people know of. It's not like anyone has an incentive to take down the insurance industry. So it really just was pure and simple a fraud that happened. It was Web 2, nothing to do with digital assets or anything. Actually was quite a positive for the utility of the transparency element of blockchain, so you can verify risk capital. But that aside, it just has become such a huge scandal, obviously, for all of the reasons that we're reading about and that we're following. But these kinds of things happen in much larger degrees in the traditional space as well. It's just the nature of, perhaps it's human nature, and giving these capabilities, the good and the bad get to use them just the same. But yeah, you're right on the resilience piece. I think it's key to remember that it's still $1 trillion in assets and lots and lots going on, and regulators are putting these things down, amidst an FTX trial. So it's obviously relatively small, I think, in practice.
My biggest lesson is, you don't have to be fully decentralized to utilize the tenets of cryptocurrency. Like, we're a centralized company. We want to take KYC. We want to know who we're interacting with, but we want to use, smart contracts and have things be on chain. So, like you're mentioning, Dan, so we can actually verify what capital is there for these insurance claims. So I think there is kind of that balance that maybe, in those early days, it felt like you needed to choose one or the other. Am I fully centralized or am I fully decentralized? And now it's like, no, we can have one foot in each place and, really use this technology, for everything that it's built for.
Yeah, you can sit on the curve at some point. Choose where you want to be on the curve, and there are opportunities all the way from CeFi to DeFi. And perhaps DeFi is where the boundless innovation can go on, and then in the middle, you're sort of choosing where you see the biggest potential to move funds and capital allocators from one side of the curve to these more open. Trustless systems, which does seem like an ultimate, but it's not like we need to get angry that large institutions aren't going instantly 100% on that side. There's a sort of growth and education in between. You may have answered our last question here. This podcast, as you know, is called The Missing Link. We see it as an exploration of what could be missing to bring this next wave, next exciting wave of adoption that we're all estimating will come at some varying different levels. If you could put your finger on one of those, what would you see as the missing link here?
The missing link in the industry, to me, is always still education, in a very big degree. To get mass adoption, we need to be better educated. We need to want to be educated, and we need to have more education for everyone, not just very interested people in this space. So I think that's my number one. And I think education will lead to adoption. It will lead to the right regulatory frameworks. It will lead to the right interest and investments and liquidity flowing into the space. So that's really my big missing link.
Wonderful.
Well
Thanks
said.
so much. It's always very obvious when you're speaking to a VC that is educated and does their due diligence directly. They always have such an obvious roster of information that they've done on all sorts of other companies. So it has been great working with you guys at Tokentus, and thanks for the discussion today, Mona.
Thank you so much for having me. Really enjoyed it.
We're one step closer to finding the missing link. If you enjoy our show, please rate and review us wherever you get your podcast. And be sure to come back next month. Until then, we are the missing link.